For the avoidance of doubt, The Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
The market came out swinging this week with the SPY up over 5.6%, but politicians and insiders have stopped buying as much as they were in the past couple of weeks. What does this mean for the markets?
Welcome to the simple side. Market beating picks inside. There's no jargon and no time to...
All right, welcome to the Simple Side. If you're just listening to this podcast, go and find our newsletter and read along. It is at thesimpleside.substack.com. Go and look that up and you will find us. Let's talk about the markets. This week, the markets were up, but we're wondering if it's going to stick. We're going to talk about my commentary, and of course, paying subscribers, you all have access to my weekly picks at the end of all of this. All right. If you've been following along the newsletter for some time, or if you're new, what I always talk about right in the very beginning are the updates and developments that I have going on in the newsletter, just to keep you in the know about everything that's coming. And I have a very exciting update. The website is now in pre-release form. So you need to head over to thesimpleside.news, thesimpleside.news. Go look it up. I'll wait for you. All right, and then you're just going to want to throw your email into that website right there. It's going to say sign up or something. I can't remember exactly what it says, but go and sign up and join the hundreds or thousands of people that are already signed up, because you do not want to miss all of the incredible updates we are about to release on that website. For paying subscribers, we sent a copy trading email out last week. For those of you that don't know, our paying subscribers can copy trade all of our portfolios on a platform. We have a partnership with a company called Double Finance. So if you're a paying subscriber, be on the lookout for those emails coming to you to give you access to go and copy trade those portfolios. Our last update is that we are going to be resuming our paid subscriber giveaways here soon, which means we're going to give away $4,000 to somebody in the coming months. We've done this twice in the past, and we are excited to continue to do it this year. Looking forward to doing that. All right, let's talk about the portfolio returns that we have right now. Our year-to-date returns, our flagship fund is down 8.02%. Our contrarian trades portfolio is up 44.58%. Our weekly picks are up 23.27%. Which means the average of all those portfolios, is up 19.60%. Now, today marks the first week into the fourth quarter of our reported and tracked weekly trades. I say it's the fourth quarter because we started doing this back in July of 2024, and we are now 40 weeks into sending out this email and this podcast that you're listening to right now. And we have been crushing the market. I could not be happier with the performance that we have seen. As another little shout out, our weekly picks have returned 43.03% over the past 40 weeks. 43% over the past 40 weeks. That is more than 1% a week. And what's even crazier is that over the same timeline, the SPY has only returned 3.73%. That's it. The SPY is up 3.73% over the same period of time that we have been doing these weekly returns. And if you're thinking to yourself, great, another guru who's telling me they can make me 1% a week. That's not what I'm saying. You can go through every newsletter that we have sent out for the past 40 weeks and look at every trade that's been in every newsletter. We report on it every single week. You can look at everything. It's all reported and documented, and it's all in emails. I can't change an email once it's been sent, so you know that all of the stuff that I am sending out is legit. You can see proof of it at the beginning of every week, just like this newsletter, and then you can see the proof of performance at the end, of course, at the end of every week. Now, if you're not following along, this is where you need to go jump over to the newsletter, because we've got a bunch of cool little graphs here that show our returns, especially against the SPY, and shows the historical returns for everything as well. And even if you don't want to go see those charts, what you need to jump over there and go look at is our markets and outlook section that I'm about to jump into. So currently, we project the returns for the market to be 1.4%. That's lower than last week's expected returns of 1.9%. And this week in the markets, we saw something that has not been typical for this year. The SPY was up, and we saw 6,681 stocks with gains in the market. We saw 2,729 with losses. Of all of those companies that we looked at, the median return was 2.97%. Now, we were only in April of this year, and it has been a wild ride. We were up, then we were down, then we were up, then we were, I don't even know. I could run out of breath just talking about all the times that we have jumped from crazy down to crazy up. And I think the best thing that you can do right now is look at your actions over the past couple of weeks. Look at yourself and ask, were you stressed out about your portfolio? Were you constantly checking values? Or were you uninterested? Were you confused about why everybody else was freaking out? And what I want you to understand is that is your risk tolerance. That's your risk tolerance talking to you like God at Sunday church. Maybe I've been listening to too much Dave Ramsey, but if you were freaking out, you're one of two things. You're either overexposed to the market and you need to pull some capital out, or you're overinvested in risky assets and need to supplement them with less volatile assets, which could be cash, which could be bonds, which could be waste management stock that doesn't have a lot of volatility in it. Either way, you need to look at your risk assessment over the past couple of weeks and decide where you should be allocating funds based on how you act. Now, a great solution for anybody who was in that nervous category is to supplement your portfolio with two subsets of holdings. One being the risky assets or the stocks that you were worried about, and the other being a safe long-term holding bet on very comfortable assets. This could be the SPY if you wanted it to be an ETF, or you could pick some of your favorite companies, Philip Morris, Waste Management, Coca-Cola, Procter & Gamble, companies like that that don't have very much volatility or very much change often in the market. Now, before we get into anything else, I quickly want to cover something that I have seen trending, and I think it's going to very soon be exposed to the public, but I want to make all of my subscribers aware of it before that happens, and that trade is energy. We've seen oil get hammered recently, and I think oil has some way to continue down. However, energy as a category, as an industry, as a sector itself is down 12% year to date and is one of the worst performing industries in the market. However, I have been witnessing bountiful buying from people like Buffett with Occidental Petroleum, ticker OXY, and with Ray Dalio, ticker VST, which I think is Vistra. Either way, both these companies deal in energy. I also see Monish Pabrai, who's buying coal stocks. He increased his holdings in one of his coal stocks 144% at the end of 2024. And I think there's a trend here that we might not be capturing. Anyway, I wanted to make you aware. I'm watching this closely, very, very closely, and I'm likely going to be updating my contrarian trade portfolio sometime very soon. For those of you that don't know, this is a second-hand AI bet, which is focused on nuclear energy, data centers, everything to do with what drives AI forward, because I think America is going to try its damnedest to win the AI race. And to win that race, you need incredible amounts of power backing you. And China right now is stacking coal. So if we want to pair up against them, we need to do the same thing and start producing wild amounts of energy. And Trump is the person in office who is going to do that. All right. Enough about my energy rant. Let's talk about our top 3 weekly performing sectors. We've got technology up 7.26%, healthcare up 6.27%, and communication services up 4.10%. Our bottom three performers, we had consumer defensive up 1.23%. That's that low volatility that I was talking about. We've got real estate up 0.56% and utilities down 0.08%. Utilities being the only sector that went negative over this past week. Now, what I'd like to talk about is the sectors that are underperforming the SPY median, or the median sector return, or the average return, whatever you want to call it. Sectors that are underperforming both year to date and over the past month. And I often see these sectors start to have impressive performance over the next month, 2 months, 3 months. So the sectors that I have for you that are underperforming on a year-to-date and monthly basis are consumer cyclical, technology, healthcare, industrials, and energy. They are down anywhere from between 21% to 14%, 25% down to 14%. So go and check out the newsletter again, thesimpleSide.substack.com, to see that. Now, I'm not going to jump into our politician trading report, nor am I going to jump into our insider trading report, but just know you can go and check both of those out on the newsletter. We track the total number of trades that politicians made, 207, the total amount of money that politicians moved in the market, 5.1 million, and the buy-sell ratio, which I mentioned earlier, has dropped down from 10.5 to 2.57 in just 1 month. So you have to ask yourself, what are politicians suddenly starting to sell? Is it the quick bump that they just bought last week, 2 weeks ago? It seems like that's what's happening. You can go and check out our insider report as well. We highlight 2 insiders every week that had a buy. We talk about their average 1 month return, 3 month return, 1 year return. So you know, if you want to go and copy trade whatever they just did, your holding period should be blank based off of what you want your expected returns to be. We also talk about how we see gold performing over the next couple of weeks. We give you a strategy and some scenarios to look out for. We give you levels to take profit at. We give you levels to buy in at. All of that good stuff. Of course, informational only. It is all just information. We're not telling you that you should go and make these trades. We're just saying if we were going to make these trades, this is the place that we would do it at. Of course, informational in nature only. We also do a quick summary of the article we sent out earlier this week, which is, of course, an AI agent that I built to do quick analysis for stocks for you. It's not meant to replace the entire process, just to make it a bit quicker. Then, of course, the last and most important thing to discuss is this week's trades. This is for paying subscribers only, and these are the stocks that I send out every week that have outperformed the market, that are currently returning 43% in just 40 weeks and returning over 1% a week. So go and check those out. If you're a paying subscriber, you know what to do. You can go and scroll down and find those. If you're a free subscriber and you want to get access to all that, join our paid thesimpleSide.substack.com/subscribe. And I will see you all next week.